All right. Good morning, good morning, good morning, everybody. Good morning, good morning, good morning, everybody. Afternoon, I should say. We have ourselves Jerome Powell coming up here very soon, in about an hour, but we get our data from him, the news that they're going to be keeping rates where they're at, most likely. At least that's what the market's pricing in. We'll be having that in the next 40 minutes. So in the meantime, we are going to pull up individual stocks. We can look at the markets first, some of the stuff taking place in various intermarket assets as well, and look to trade this market. Getting some big movement in names like Carvana today on a short report, bringing all types of volatility there. If you look at its implied volatility, we just recently hit a 4 standard deviation move inside of Carvana. So that was pretty crazy, to say the least. Hope everyone's having a good trading session so far. Managing risk. What's up, everybody out on the Twitch space? What's up, Barkster? And what's up, everyone out here on YouTube? What's up, Wolf Banter? Colby, morning. Jew, Mike, Deck, Red, yo, howdy. Hopefully everyone's doing well. Let's go ahead and hop into this, and we're going to start by looking at the S&P 500, and we'll look at market net flow today. So first, this is SPY. It's on a 15-minute time frame. We have a wide open range of risks for the day. We have basically moved nowhere so far. That could be because the market's just waiting in anticipation for the waiting in anticipation for the Fed to come out. All right. Market net flow, not the greatest look. We've had the red line above the green line. The green line's been going down, so it's been putting pressure on the market. However, it's overall not incredibly bearish. We don't have convergence. What does that mean? It means that the price of SPY is not moving with the current divergence in cumulative net premiums of calls and puts. And we're seeing the SPY bounce just a little bit over here. Once again, overall flat. Let's take a look at the SPX, and we'll take a look at the NQ as well. Let's first start off with the SPX. The SPX hit into 7,000, a new all-time high. We knew it was going to hit there. We didn't know what it was going to look like and how it was going to get there.
Just
but
a note for
come
NVIDIA NVDA, Congress must reauthorize National Quantum Initiative.
We had to get there. Alrighty. As far as some of the 0 DTE levels that are on the radar, we have that 7,000, which we already tagged. That was right here. It was one of the larger ones this morning. We broke from that a little bit. 69.85. So 69.85. We're right in around this area over here. So we can potentially update our charts. I'm not going to do that right now. And then below us, we have a put wall at 69.50. That's about 24 points or so below us. And that would be right here in and around the lower daily implied move. We are still above the gamma flip line, so we are in positive gamma. And that is a good sign. That's where dealers look to buy the dip, sell the rip, and volatility typically comes in. We do have, obviously, an event about to take place here. Take a look at Carvana. I had to show this one because Carvana is just moving like a, I don't know, like a boulder inside of water. This right here was highlighting the 3 standard deviation move. This right here is a 4 standard deviation move. Let's pull up the daily time frame. And this is just based off the implied volatility. Down 20% on the trading session thus far. Broke this prior low over here. So yeah, you'll probably see some rips back. This is some interesting volatility. I like to trade this type of stuff. I'm usually a little bit quicker in and out of trades. RSI is getting obviously very frothy, but the sellers have just absolute control of it right now. So just be careful if you trade this type of stuff. You know, I like to trade from underneath key levels like these, and I trade back up into them. But you just got when you approach this, if you need to have your risk kind of mapped out, because you don't want to buy and then you don't want to buy again, and then you don't want to buy again, because eventually what happens is you'll feel the pressure of the position, you'll get out of the position, or you'll be forced to get out of the position, and then the price will reverse. So you typically start small to the point where you're like say if I were to buy right here, right, and it comes down like this, that move it would not hurt me, right? Because you'd have to think in terms of volatility expanding. We'll talk more about that when we look at some of the precious metals here too, because gold is rocking. I started a short position there that I can walk you through as well. I gotta really walk you through it because people are, once again, they're not gonna quite understand what that entails. Give me 1 second here. Okay. So let's take a look at some of the intermarket stuff. We're going to start off with gold. Gold is screaming right now going into the Fed press conference, well outside of the weekly implied move. In fact, we tagged it yesterday, and then we broke upwards to the almost 2 standard deviation level now for the week in gold. And this came off the back of Trump basically saying that, yeah, the 2 standard deviation is like just up just slightly a little bit higher. Basically saying that what the dollar is doing is fine, and the market did not respond in kind. So if we take a look at what the dollar is doing right now, we have slightly bid. So we're seeing gold rally with the dollar kind of flat over here to slightly up. But this right here, if you were watching last night's market brief, you saw this reaction. Pretty crazy stuff. Yeah, I can go over silver too as well. But first, I want to walk through kind of gold and kind of the thought process here. First and foremost, I did take a stab short in gold, and I got pretty so first off, I think context is most important because let me bring up just the daily chart. So first and foremost, when you're structuring a trade that's a very high implied volatility, which by the way, silver and gold are very high implied volatilities. It's not a record for GLD, but it's one of the higher implied probabilities. I mean, the last time we were this high was when? The pandemic, right? So anytime we have these high implied vols, there's some sort of a crisis, some sort of something taking place. So when you have a higher implied vol, it means the ranges of risk, right, dramatically open up. So you need to think through that in terms of position sizing. When you have more risk, you need to go smaller sizes. That's why you can't really average into positions and do crazy things. So when I was looking at here, and I shared it on the Discord, I didn't draw the boxes anymore, but basically I was looking up to and around this range for the risk, which I mean looks crazy, but really that's like what, 7% from here, 7 or 8%. No, I did even higher. I think I did 7 or 8% to the upside, and that's kind of where I mapped my risk out, which is 7%. Gold right now with its implied volatility where it's at will have daily moves of 3+%. That's how crazy it is. And then when I looked at as far as the downside goes, it'd be like down into this range. Now, when I start a position, it's smaller, especially from the short side. It's always half the size of a long position. So if I go full size long, which is 10%, my max short position would be 5% of my portfolio. So the way that I mapped out my gold trade is if it goes up another 8%, I think it was, I would lose about 65 basis points of my portfolio. However, there's something interesting happened as soon as I shorted it. And that was right here. I dang near top ticked gold earlier in the trading session. Obviously, it's not a top tick in hindsight. But what had happened was I used GLL as the proxy here. And over here was my initial entry. And for some reason, right then and there, price, and by the way, this is a small position, flew up. So as it flew up, I just said, okay, well, I'm going to go ahead and dump 25% of this. So now the position's even smaller, so I have to rework my math. But that's how I structure a trade. It's a piece of inventory. I'm never net short, and I hardly ever short. Okay? The only times that I put in size in like a short perspective is perhaps maybe if it's intraday and I'm not holding that overnight. People have a hard problem with a short going against them for some reason, but they don't have a problem if they're long and it keeps going against them for whatever reason. Because most likely mentally they know that a short can keep going and going and going, right? And then as far as a long goes, it's like, well, if it goes bust, you know exactly what you're losing. Okay. So there was the thought process there. Let's look at silver. Silver's also a big mover here. That's what happened to silver. Silver's down on the trading session. What just happened in silver? Okay. So silver was up like 2% or something like that. And now we're, I guess, flat on the trading session. That's pretty impressive. Give me 1 second here. Keep getting pinged. No, no, no. No, you don't. Okay, so silver is another one that, yes, it'll result in most likely a big drawdown, right? We'll probably see a big move to the downside, but I'm not, like, once again, if you approach these products from the short side, right, you need to think in terms of volatility. And when you look at the implied volatility of silver, we are at historic levels. It's 102%. I mean, okay, I truly think that people do not just like quite grasp the dramatic implied volatility that we're seeing in something like silver, which is a commodity. If you go into the trade tab, look at the implied volatility. Holy heck. Look at, go 5 days out, it's looking at a $10 expected move, 110% vol. Go to any name in the S&P 500, the top names, you're not going to find that. It's trading at a higher implied volatility than NVIDIA, than Google, than Apple, than Microsoft. It's like double than Amazon, right? Then Meta. Meta is pretty high, but it's not nearly as high as Tesla. Broadcom, double. Tesla. Tesla's up there too. Does a Tesla have earnings or something? Am I missing something? Is Tesla earnings today? Oh, hey, Tesla earnings. Well, even with Tesla earnings after the bell, silver implied volatility is higher. So why I'm bringing this up to your attention is, first and foremost, if you're not aware of how to volatility adjust a position, do not short. Do not go long, do not short, because the moves are going to be wild. Like, right, I was kind of tuned out last night, but when I looked at the overnight trade in, I think, gold or silver, I mean, look at this thing was going straight up, right? This right there is still within normality because of the implied volatility that we're seeing. Like, what did gold just do here? What the hell? I start talking about shorting, and did a whale just come in and start smacking the market down? Come on. What the hell, people? We're getting some big movement. So once again, look at, this is within minutes. Gold just fell about 1% within just a few moments. This is wild volatility, people. And remember, these type of moves, just like this one here, right? This one here, that's why I sold 25% of the position, or covered 25% of the position, because it's already a very bullish, you know, everyone's looking to buy the dip. It's still very bullish context, and it ripped right back up. I didn't re-add. I was thinking about it, but I didn't. Okay. I'm rambling. But it is impressive. This is historic times. So it's historic. We haven't seen this before. By whales, I mean, we're getting, these are some huge orders coming through. That was the biggest volume spike, is what I mean. That move right there was the biggest volume spike, basically intraday, other than this one right here. That was a gigantic move. These aren't small moves. Okay, they're not small moves, but it's all within the context of the right implied volatility. We got Jerome Powell giving his presser in less than an hour, and then at the top of this hour, 11 a.m. Pacific Standard Time, we have the thing coming out, the interest rate decision. Wild, people. You're long Carvana. Okay, yeah, let's pull up Carvana. I wouldn't mind trading it. Let's take a look. I don't love the look of this right now. Maybe if I can get like another flush, perhaps, maybe I might try to approach it. This is crazy. And then maybe try to like do a quick scalp to the upside. But we also have, once again, the Fed coming out, and that can cause all kinds of stuff. Right now, Carvana's sitting at about 20% down. I'm interested to know how far deviated it is from the band. Let's go 2 standard deviation band. It's probably just hugging it the entire way down. Yeah, it's just hugging it. All right, so, you know, if we get some sort of a flush underneath maybe the 2 standard deviation band, that 2 standard deviation VWAP band, right? That's why you see it moving, right? It kind of breaks through, break, boom, boom, boom. Just lower highs, kind of crappy. So maybe if we get like some sort of a flush underneath it, which means I'll probably miss it if it doesn't come, but you never know. Yeah, big knocking, the thing that's causing metals to go up. I mean, we'll know, it's all obvious in hindsight, right? We know it's going to be obvious in hindsight, but that's why we've been paying so much attention to where money's been rotating into, right? Look from a year-to-date perspective. Silver, almost 60% up on the year. It was today, over 60%. Gold is up 22%, okay? So, I mean, really, I mean, if you pull up I would imagine that if you pulled up a relative strength chart between S&P 500 and gold, I bet you that even though the S&P 500 is up at all-time highs, that we probably haven't moved anywhere for, I don't know, decades. Relative. Now, materials is up 10%. Consumer staples is up 6%. Those are some of the 2 top performing sectors that we've been having money rotate into. When I pull up XLP, look at, it's been straight up this year. Going into this year, I put out a video where I was talking about some interesting stuff taking place in the consumer staple kind of space, and how I, was looking into various names, nothing like concrete, but I was saying keep an eye on some of these consumer staples, because if we get rotations into them, so rotation to safety, they've been beaten down. Perhaps that can lead into, a rotation when the market gets kind of on edge. And remember, we're at all-time highs. Once again, we're pushing away from the 7,000, which was a key gamma level. And we've been kind of just floating. But underneath the surface, behind all these doors, most people will just look at their balances and everything and be like, I'm at new all-time highs. Things are good. Everything's great. Okay. That's the same exact thing that's happened before the pandemic. That was the same thing that happened leading up to the financial crisis. That was the same thing that happened leading up to the dot-com bubble. All new all-time highs, every single time. So when something happens like risk, it builds slow, and then all of a sudden just unfolds. So the point of my streams, the point of my videos is to prepare people to teach what's shifting in markets. People say, you're bearish. But that's like the uneducated mind telling them that whatever I'm talking about is bearish. It's all about risk, because risk is the only thing that we can control. We can't control where the stock goes. Some institutions can. Some big traders can control various stocks, right? They can move stocks, right? I could probably move some stocks, but they're going to be very low liquid stocks. The point of it is, we can't control where price is going to go, but we can control how much of it we buy, when we buy it, how much we sell, or when we sell it as well. Okay? 4 things that we can control. So we might as well get good at that. And when we start to see shifts and changes take place in the market and things start to line up, it don't matter that we're at all-time highs. You start to look at the risk and the reward. Does it mean sell everything? No. Does it mean short? No. It doesn't mean either of that. It means that perhaps when you see good setups in the market, you can take them and then make sure that you're updating your stops. And you just got to be very, like, if you see a storm up ahead, think of it this way. You're driving down the road, you see rain clouds up ahead. Does that mean you're going to be like, oh, dude, I can't drive through that, I'm going to turn around? No, you can weather the storm. You can drive through the storm, but slow down. But for some reason, when people see the storm, aka volatility, and when they're in it, they all of a sudden want to speed up as if they have something to prove. No, don't do that. All right? Hey, what's up, Bam? Okay. Yeah. So we got 18 minutes. We'll pull up some of the names, right? NVIDIA's up today. I think there was some news out of China. NVIDIA was one that I was actually kind of bullish on. And then this move, I was bullish on it over here, I think, and then we gapped up and I was like, I missed it. And then it went down. I was like, I'm just going to stay away. And then it came back up and I was like, oh, maybe. And it just got a little too shaky for me. I like when volatility contracts, and this was opening up. It was kind of expanding, and I'm just not really that type of trader. So if I were to trade NVIDIA's breakout today of this-ish, whatever you want to call it, the stop would be basically down here. And I would be targeting up higher. I didn't trade it. I don't have a position in NVIDIA. Thanks, Debo. Appreciate that. Don't market makers run price to your stop? No, they don't care about my stops. Market makers are all about delta hedging, being delta neutral, creating markets. People, I think people really need to look up what a market maker's job is and what it entails. But they're definitely not coming after us. You know, they make markets. What I will say is, if you're doing spreads in the options market, don't put stops. Don't use stops if you're doing spreads. There's no point. There's no point. The spreads are built to be a risk parameter, and you can see those orders. Okay? So there's really no point to put in a stop loss in a spread. Just make sure that your spread makes sense if it goes to zero, if that makes sense. I don't really trade options, but I know that it's a stupid idea. It's my opinion, I guess. It's a stupid idea to create a risk-based trade that encapsulates as a risk in a hole in a spread and then put a stop loss on that. I just do not see the point in something like that. You got to think through that before you let it play out is the point of a spread. My opinion, don't shoot the messenger. Okay. Yeah. So, did Carvana break down lower or no? Oh yeah, it is breaking down lower. Let's see. Okay. So it didn't really reach down into the 2 standard deviation level. The lower VWAP band. I mean, it's darn near there. So yeah, like if I wasn't live, I probably would have just scalped it a little bit and maybe played it up a little bit here. I don't know. Let me see here how fast this thing moves. I mean, just right up to just a little bounce is up 1.5%, $6 per share. Like, holy hell. Like the size of my position in this would be so dang small. It would have to be. I'd just get destroyed if it went against me. Yeah, just, you'll get these strong moves to the downside, and you get a nice little reflexive bounce. They've all been lower highs. So I guess if you're trying to be a little bit more tactical, wait for the higher low and then wait for price to tighten up, right? Instead of trying to catch the bottom. The only time that I like to really fade is if it does, extend, maybe it's 2 standard deviation of a band or something like that, something much more extravagant. Okay. So the SPY, that was gold. SPY, it's doodling around its weekly VWAP. It's kind of just holding the line right here. So breaks underneath it. It can get, a little bit more crazy. We do have not the greatest looking market net flow. So just keep that in the back of your head. Fed up soon. As far as the NQ, I'm sure that's probably just trading around low. Oh, which reminds me, did I have a position on? No, I don't. Okay. Oh my gosh, that would have sucked. Whew, take a breather. NQ, I'm just looking at the structure here on NQ. Pretty calm overall. Putting in some higher lows here. Underneath its opening range, and still, once again, market net flow is not the greatest. So I think I got to just kind of wait for price, wait for the news. Yeah, I'll be turning on the Fed speak. Yeah, I have the video live ready to go, and we'll listen to the notes from my news feed as well when it comes out. S&P 500 still slightly down on the trading session, but relatively flat. Nothing big going on here yet. Okay. Silver is now down almost 1% on the trading session. This one's underneath, actually. It's 2 standard deviation VWAP band, although it's not really trending. Let me change this off. I don't really need this here. Okay. But overall, what is silver doing? Silver is at highs, right? We hit this high. We had a big reversal. Now it's kind of floppy and jalopy around. People are like, oh, it's coming all the way back, and then it comes right back down. Surprise, surprise. This is volatility. Tesla up or down post earnings. Let me see here. I don't know. I've been kind of bullish Tesla. I mean, I'm honestly bullish everything. I lean bullish on everything. Like, right? Even though that I started a short position in gold, I'm still bullish it, right? In all honesty, if I'm being honest, the price action's bullish, I'm bullish. The trend's up. All I'm doing is just small fades. So yeah, my idea would think that Tesla's going to go higher, but like, I don't know. I feel like it's not going to be a great report. So we'll see how the market takes that in. Right now, what the market is pricing in, $25.57 of expected move. So $25 and some change, that could bring us up about 6% higher or 6% lower. Tesla's really kind of, I've been watching it, this kind of rip here and then this pullback, and it's been just doodling in this kind of pocket. Not that these fibs honestly really matter all too much in the grand scheme of things, but they could be used as risk markers. When you get like strong moves, they can fade in, pull back 50% of the time. So the thought was that we can break out and go higher. And the larger time frame charts too, I mean, it doesn't look bad at all, right? It's like we broke out, we're pulling back in. Is this a shakeout before another move higher? So
making you aware, in 10 minutes time at the top of the hour, we will get the latest Federal Reserve rate decision, followed by the Chair Powell press conference 30 minutes later. The FOMC is widely expected to leave the policy rate unchanged at 3.5 to 3.75%, with focus on any forward guidance. While a hold is widely anticipated, dissent is also expected, as Myron is an almost certainty to vote for reduction, and attention will be on if anyone else joins him, with Bowman seen as the most next likely. Highlighting the consensus, the latest Reuters poll showed unanimous expectations for no change in rates this confab, and 58% of economists surveyed by Reuters also see rates staying on hold through the quarter. Money markets are currently pricing in around 45 basis points of cuts by year end, with the first 25 basis point reduction seen by July. Goldman Sachs said the meeting is likely to be uneventful, with no change to the federal funds rate, only minor statement tweaks and few clues on the future policy path. The bank does expect Chair Powell to stress the FOMC has already delivered 3 cuts to help stabilise the labour market and is well positioned to assess the impact. As in recent meetings, guidance is likely to matter more than the decision itself, particularly around how long policymakers intend to remain patient before easing eventually comes into view.
Okay, that was long. Thank you for baby number 2 is here, healthy, doesn't sleep. That's great. Running on no sleep. Greg, yes. Do I think that it's tracking 2018? I don't think that the S&P 500 is tracking 2018 that good, but there's products that are tracking it quite well. Like we've been seeing, like in 2018, at the very beginning in January, you saw the S&P 500 just continually blast off. Before February, or right into February, then you saw about a 10% decline. So there are products that we've seen massive rips to the upside. Like, I don't know, like SanDisk, right? Like a lot of these names, like SanDisk, WDC, there are names out there that are doing that parabolic move. And I mean, like even IWM, right? IWM did a nice parabolic run right at the beginning. Consumer Staples did a parabolic run right at the beginning. Gold is doing it. So there's assets and there's products that are. So SPY, not so much. SPY is basically kind of stagnant. And I think that it has to do because financials got very frothy going into this year, and then we saw it pull back. In fact, if you watch a few of the videos prior leading up to this, we were talking about the bullish percent chart for financials and that it was getting too frothy. And now, we're pulling back here a little bit. But it's not like it's bearish, right? It's not bearish. Look at KRE, right? KRE's, not really bearish. It's up on the year. But yeah, the dollar's tracking quite well. The dollar's tracking very well. The comments threw me for a loop yesterday because he said that it basically seemed as if I have no problem with the dollar dropping. The dollar's doing great, but the dollar's been in a decline. So I need more context. Okay. Something similar was said by Munkin. I can't pronounce his name. Somebody got to Steve Mnuchin back in 2018. And Trump came out and basically said that he likes a strong dollar. On yesterday's video, I talked about that because I had the video clip. He likes a strong dollar. It represents, a strong economy, and a strong dollar. So part of me thinks that I don't know. I'm not trying to wrap my head in the narrative, but what I do know is the path of the dollar for Trump in 2017 and 2018 is matching too perfect to what we're seeing right now. And leading in to 2025, so 2024 into 2025, in 2024, I went to the NASDAQ and I remember doing an interview. And what I said there was if the dollar continues to track, which that's what it's been doing, it would be good for gold. It'd be good for China and so forth. And we saw big moves out of the gate. Obviously, gold continues. China out of the gate, we saw big moves. So now we're seeing a lot of emerging markets do very well. But what the missing piece here is, it's is this going to be, once again, and by the way, back in 2018, everyone was fearing the end of the dollar, right? That's the same thing, same story. Right into and around this time, but back then. So now, I don't know, part of me is just thinking, I think that we're getting full fear baked in. I don't think that there's anything necessarily to worry right now about the dollar. Maybe if it starts really cracking down, then things could obviously go haywire, right? Obviously. But I don't know. I'm just watching what he did last term. I'm watching it now and it's still matching pretty darn good. It's almost an 80% correlation. So I don't know. Mnuchin. Thank you. Mnuchin. Mnuchin or Mnuchin? Mnuchin. Thank you. Mnuchin. It's Mnuchin, right? Mnuchin. Thank you. I'm not good with proper grammar. I'm not even saying I'm not. I'm not saying. Or is that Greg again? I'm not saying to look at. I want to be once again very clear. Wait a second here. Hold on. Okay, here we go. I forgot what I was going to say. We have Fed in 4 minutes. The Fed announcement here in 4 minutes thing. Nasdaq's catching a little bit of a bid. SPY's catching a little bit of a bid. Let's see whatever happened to Carvana. Carvana's catching a little bit of a bid here. My new chin. My new chin. Three minutes. We're going to pull up the S&P 500. We'll have the NASDAQ up. We got S&P 500 here on the NASDAQ. Looks like it's trying to get ready to blast off. I shall not be tricked. I will rather miss it than be tricked. Let it digest. What performs at the end of cycles? What kind of cycle are we talking? Like a and what part of the cycle? Because cycle is kind of continuous, right? So are you talking about like the end of a top or like a market top, or are you talking like an economic cycle? So typically the stock market leads the economic cycle. So you can see various sectors perform pretty strongly. Like for example, energy starts to outperform, materials starts to outperform, consumer staples then, and then sometimes healthcare, except healthcare kind of has been doing good. Up until recently, it's pulling back. I think UNH. What happened to UNH and Humana? We're catching a little bit big back into UNH today, up 4%. What's up with Humana? Is that still down? Holy macaronis. Humana. I don't know anything about this company, but man, that's no relief there. CVS, same thing. Got hit, but I think we saw a little bit of a bid back. Yeah. This one is one that I traded intraday. Left a little bit on, which reminds me I'm probably just going to cut the rest of it. Okay, 2 minutes. Got NQ over here.
1 minute now until the top of the hour. We're expecting the latest FOMC rate decision. They are widely expected to leave the policy rate unchanged at 3.5 to 3.75%.
I'll take a look at here. I'll take a look at net. I'll take a look at now here in a moment. T-Doc was hammered. A lot of these like software type names. I don't know if no T-Doc is like Teladoc Health or something like that, right? All right, here we go. T minus few seconds.
Ten seconds.
9, 8, 7. I feel like we already know what's coming, so let the market do its thing. And then we got to listen to what.
And that's unchanged as expected. 3.5 to 3.75%. There was 2 dissents. Myron and Wallet dissented in favour of a 25 basis point cut. So that's a 10-2 decision. 2 dissents with Myron and Wallet dissenting in favour of a 25 basis point cut. Within the statement, it does note that unemployment has shown some signs of stabilisation.
All right, so we got that out of the way. Market's starting to catch a bit of a bid here.
And just looking further into the release now, it does note that inflation is still somewhat elevated. Economy is expanding at a solid pace. Job gains low with unemployment showing signs of stabilizing, and the outlook uncertainty remains elevated, and it is attentive to risks on both sides of the mandate.
I'll go ahead and apply a volume weighted average price to the just the announcement here.
So just regarding some of these statement changes there from this FOMC, it does note that the economy has been expanding at a solid pace. Do note it previously said at a moderate pace, and that job gains, as mentioned, have remained low. It previously said slowed this year.
Seeing bonds kind of take a little bit of a nosedive here. Bonds coming off. Whoa. Some big movement there. Let's take a look at the dollar. Dollar's starting to kind of rally here a bit. Don't overthink anything too much yet, but we're starting to catch a bid in the dollar. Once again, we still need to hear Jerome Powell speak, and the 10-year yield is starting to rally here a bit too. Quite the move actually in the 10-year yield. Starting to see silver. Silver hasn't really budged too much there. Gold is up 1.7% still. Slowly kind of getting hit, just choppy over here. Nothing to really report there. Probably will recover.
And just making you aware, in wake of that latest Federal Reserve meeting, we
SPY
have
catching a little
seen
bit
little
now, a bid
reaction
down.
across markets. In terms of, and just recapping that decision, they did keep rates unchanged as expected at 3.5 to 3.75%, and that was as widely expected. The vote split, though, it wasn't a unanimous decision, again as expected, with Mine voting for a 25 basis point cut, and Wallet did join him on that in also voting for that rate cut. In terms of the forward guidance, it did once again note it will assess incoming data, evolving outlook and the balance of risk when considering further rate adjustments. And it does note that they will monitor labour market conditions, inflation pressures and expectations alongside financial and international developments.
Okay, so it reversed on
And
itself.
also,
Let
in
it
terms
digest.
of
Let it do
the
its thing.
balance of risk, it does note the
Trying to trick me there.
uncertainty about the economic outlook remains elevated. They are attentive to both sides of the risk of the mandate.
It's not the greatest look
And just
for
further
markets.
within the statement compared, just making you aware of one additional tweak. It does note in support of its goals and in light of the shift in the balance of risk that has actually been taken out of this FOMC statement in comparison to the December meeting.
It's not the greatest look in markets when the yield goes up and the dollar starts rocketing too. So once again, we got to see how it all digests. Got to see how it all digests. Big move in yields, man. So if you go back to the whole 2018 playbook, you saw the 10-year yield actually rally. You saw the dollar fall. And then going into February, there was a 10% correction in the markets. And then we went sideways, a lot of volatility, and then it started to finally recover up until the pandemic. I wouldn't too overthink NQ right now. I mean, this thing could be right back over here. Right, press conferences coming up. You're going to see volatility here, both directions. We'll see if it actually breaks a certain direction here soon. The red line's been going up, green line's been going down, so that is the more bearish tone of the market, right? The cumulative net premiums of puts are rather flat, actually, but the calls are going down. Cumulative net premium of calls are going down. And the market's still flat overall, right? It's just flat. Okay. And then if you look at the daily candle, if you zoom out, holy moly. Oh my gosh, right? It ain't doing nothing. Nothing yet, at least. Tradable products today. Let's go back over to Carvana. I'm still kind of interested in that, as long as we didn't we kind of bounced already. So this is, once again, this is a 4 standard deviation move based off of its implied vol. This is a 3. I'm trying to see some sort of a higher low here. No higher high. If we went down and did something like this, I would like something like that or something like that. And then maybe try to play it back into this, but I don't know. I don't know if I want to risk the biscuits here right now. All right. Big move during the meeting. I think that we're going to just get more kind of volatility. We might see some big moves in various names and various assets. Like, right, I'm still trying to keep an eye on the dollar because that could be big. Because, if he comes out hawkish, maybe that makes the dollar rally up. I don't want to do narratives, but if we start to see the dollar really move, right, volatility in FX we saw quite the uptick, and that can really shake markets. And then we're looking at the 10-year yield, and it's also moving, right? And look at bonds, right, down 50 basis points or so. If TLT breaks lower, that's also not a great sign for the market, seeing the bonds break lower. Let's take a look at CL. Right, oil broke out. Also not the greatest sign for markets when you start to see oil outperform. This could be inflationary. I mean, hasn't really done much yet, but you know, when energy outperforms, it's not the greatest sign. Yesterday's video, we reshared the chart where copper typically leads oil. My mic level's low. Test 1. Test 1. Right now, how is it now? A little bit better. Yeah, we don't. Yeah, I don't know if anybody cares. Well, I think people are going to care what he says. It just depends on what he says, and maybe if Trump responds before or says something beforehand, or potentially right after. We'll see. You could be right. You know, who cares? Like, just watch the flow. I'll be honest. Like, people are saying this time is different in silver and gold and the market and this or that because of supply and because of XYZ. Dude, like, I'm sorry, but if you just look at the implied volatility, why are you seeing moves like this? Right now, it doesn't matter about the supply and all this stuff. It really doesn't. Look at the flow of the market. Look how many contracts traded. We're at 2 million contracts. This morning, we had like 500,000. It was crazy. This little pump here was like 500,000 contracts. You can't tell me that these type of moves intraday are happening because of a supply shock or supply. It's all order flow. Crazy, crazy times. Crazy, crazy times. Silver just kind of going sideways here. Silver's flat on the trading session. Was up massively. Gold came off a little bit, but I mean, you know, it did this before, then rallied back up. It did it again. Now it's going sideways. I don't know. I wouldn't even consider this bearish. Not right now. I would consider it more bearish if the dollar actually did find its bottom. So we'll see if the dollar wants to continue. Yeah, USD, JPY. I mean, I look at the trade weighted dollar. I'll look at some of these ones too as well, but it's, you know, in theory, you know, very similar type look. Because the trade weighted dollar is just, you know, against a basket of currencies. So if you go to the daily on this, right, you saw the massive like kind of drop down. I don't trade currencies. I mean, if I do, it's via ETF, but not like in the FX market or anything like that. Hey, Vinny. Thanks. Hey, Vinny, I saw your email too, by the way. I'll get back to you. Can sync up. Yeah, the decision happened to keep rates where they are at. As right now, the market is fluttering around its volume-weighted average price from that announcement. We're kind of like slightly above it right now. So, you know, I mean, this is a 30-second chart, so take that with a grain of salt. But we're basically at the volume-weighted average price from the announcement. So we're digesting. Now, Fed's going to come out. They're going to talk. We'll shoot right back up to 7,000. No, I'm just kidding. I have no idea what's going to be said. Show MNQ. I mean, it's pretty darn similar. I'll pull it up over here for you. Here's MNQ on the daily. A little bit of a reversal here, obviously, after its initial pop. And now we're just kind of firing off sideways. Let's take a quick look at tick chart too, see if anything's happening there. I haven't gotten any alerts from the tick. So we haven't got any sort of extreme readings, plus 1,000, minus 1,000. Gold's back up to 2% on the session. Like I said, it didn't look really bearish. It looks now like it's going to try to come back up. And then I was interested in trading Carvana. This one's coming back up to its 4 standard deviation move. But I'd rather see kind of I mean, I guess this is a higher low. But I'd rather see something a little bit more prominent before trying to do that. Thanks, Katie. Sometimes the best trades are no trades. You are absolutely correct. You are absolutely correct. All right, silver's back up for the trading session, seeing a nice little bid back there. NVIDIA is... Wait, what? What is it? Oh, yeah, I gotta try it. Yeah, thanks. That's pretty good. Right? Pretty potent. Mm-hmm. My wife wanted me to try something. Okay, back to it. Yeah, what's crypto up to? I think some questions were asked. Exotic asked me a question. I think I forgot to answer it. Let's make everything rally except for crypto. Ain't that some ish? Google flat on the trading session. Apple's down to 1.21%. Man. Gold looks like it's going for another high. Tech slightly bid. Consumer communications, sorry. And then we have retail is getting hit as one of the more prominent sectors getting hit. And then we have healthcare as well, down 1%. And that's trading at the lows of the trading session right now. I'm interested to see here the Eli Lilly, J&J. I thought maybe Humana would be somewhere in there, but I didn't see it. Probably overlooked it. But yeah, Humana, this thing is just getting smoke showed. Yeah, we're just waiting. He's going to be talking in 15 minutes. We got the Fed video right here. The live feed will be going. We'll see how that moves markets. We'll see what he says. I'm sure that the prediction markets are doing something here. What he will say during his press conference. Will he say inflation 40 plus times, 50 plus times? If he says it 40 plus times, that's a lot of times to say the word inflation. It might mean something. Do SoFi. I can look at SoFi. I mean, so for me, I don't really like charts that look like this, right? So it's bullish, meaning that we've came a long ways, but these are type of like, you know, topping type looking patterns. So for me, I would need to see it back up into and around this range up here and start to tighten up where these, like the 50 days start sloping back up, the 20 day as well. And then it's like proving itself. Because right now it feels like I'm on kind of the edge of a potential breakdown a little bit lower. So for me, I kind of just wait these ones out for a little bit cleaner of a setup. And I don't short. I'm not bothered to shorting that. All right, silver's up now 1%, so this one's catching a bid. We're seeing metals move higher. Silver just came into its daily VWAP, and then gold is probably near its highs of the day, somewhat near its highs of the day, kind of just in a more of a choppy range. Palantir, I think Palantir kind of looked the same too as well, yeah. Yeah, and this one's actually coming to its 200-day moving average. It's inclining. So, you know, sometimes there's trade opportunities around these areas where you can catch little bids, but the thing is just pay attention that you have the shorter term average down, meaning that you basically are seeing a series of lower highs and lower lows in the shorter time frame. But, you know, you zoom out and you're like, okay, well, we went really far really fast. So it's pretty normal to see 20, 30, 40, sometimes even 50% corrections in names like these where volatility completely picks up and then it builds out a base over time and then starts to create more opportunities. So when I go into the weekly time frame or daily time frame, it's like, yeah, if I was to trade this, I guess it would be based off of a range because that's what we're doing. But I would just have to keep in mind that it still has to prove itself quite dramatically. So if it flushes in, comes in, like I would need to see something, you know, more like that, you know, take place. We're going to have to prove itself a little bit more for the risk to reward, just to make a little bit more sense for me from the long side. Got about 13 minutes left here. Oh yeah, ServiceNow is one of them. Yeah, now, NOW. Yeah, just not a great looking chart here. Yeah, I'm not much of a fan. You have everything sloping down and the price going with it as we break to new lows. So, yeah, this could go sideways for a while. You'll see pops and drops, but the only time that I like to buy bottoms or try to catch some sort of a bottom is when we have a pretty clean setup. Like, for example, I did Clorox, and Clorox had this low and a lower low here. It's been beaten down for a while. It was in the consumer staples kind of sector, but during that time, I was seeing some relative strength, right, in the RSI. Right, just give a quick little hit there. Oops. We saw a little positive divergence on the RSI. So I thought maybe this would be the time to try to execute into something like this, and we saw a nice pop there. That still doesn't make this chart bullish. It's still bearish, right? It's still bearish completely. It's the same thing with Target, right? Target saw a strong start to the year. Now it's pulling back a little bit. So I'm looking to execute into Target just to see if this kind of start of the year is just pulling back and we're going to start to see more strength in the near future. But this one at least is back above a 200-day moving average. It's starting to flatten out. The 50-day is starting to cross back over. So this to me, makes a little bit more sense than something where the 200-day is still way above. Perhaps this larger base is building out. We saw something similar with like Dollar Tree, right? Dollar Tree built a base back over here, right? And we were monitoring this on the daily time frame, and then we broke out, boom, 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 and we started moving. Now it's pulling back pretty significantly. A lot of these consumer staples are. Right now, at least, after a big run. Can't really be too shocked about that one. Bam. Nike. Yeah, I'll look at Nike. Yeah, what's Nike up to? I haven't seen Nike chart for a minute. It ain't doing anything. It's getting hung up at its last year's volume weighted average price. So for me, on Nike, if actually, I would be interested if we can start getting back above here, like above 68. And the reason is because this purple line is last year's volume weighted average price. So people are kind of underwater. If this started to tighten up, maybe do a pilot position for anticipation of a breakout.
Be on the lookout for
but right now, it's kind of in no man's land.
Fed Chair Powell's
which
press
I don't
conference.
Love.
As always, we'll be paying close attention to any forward guidance he does provide us, given the lack of details that we have in the statement regarding that. Of course, that is usual practice for the Fed in recent meetings, but as always, be on the lookout for any details regarding that. That also does come following the seemingly upgrade to the economy and the jobs market in the statement. As a reminder, we do note that economic activity has been expanding at a solid pace. That is from the prior moderate pace that it referred to as, and that also the unemployment rate has shown some signs of stabilization.
We got 8 minutes, 9 minutes. I'll go through these names that you guys posted here really quickly. So Path, we're seeing lower highs, right? Lower highs into last year's volume weighted average price. We're below these 50 days, so perhaps maybe if it does set up, does something like that, awesome. But right now, it's just the risk to reward. I don't see a very clean risk to reward, as if it was something like when I made this a trade idea called Fresh Pet, right? You're seeing higher lows. It was getting tight. It was getting kind of back above these averages. This to me was a good idea. So I executed into it. I took some off at the VWAP, and now we're consolidating right underneath last year's volume weighted average price, and we're getting pretty tight. So this to me makes sense for a potential press higher. But I locked in some of those current gains. So that's more of what my style. So if I look at the name and I don't see that, it doesn't mean that it won't set up. It just means that this is kind of just what I'm looking at here. Hey, D Baron, welcome in, man. Thank you. Thanks for coming in and supporting. Somebody had mentioned CLS. CLS is, this looks great. CLS is darn strong, right? So this one is less, bearish looking than we saw some of those other tech names. But yeah, so it came from down here to up here very quickly. So for me, I need to see, maybe something like that. And if it does that, then I get a little bit of a consolidation. Maybe, oh shit, earnings is right around the corner. So I can't I can't execute into earnings. I'm not using options. I'm not doing butterflies and things like that. So unfortunately, if you are in the name, it looks good, but you always got to take into consideration its earnings expected move. So are you okay with winning $37 per share or losing $37 per share? Right? That's as one standard deviation. It can go past that, but that's what the market's pricing in right now. So there's CLS, GFS. GFS also, great move. And it's now above in some bullish context here. But once again, it's a little too extravagant for me to just enter in right now. I need to see consolidations. I need to see price action tighten up, firm up to create better risk to reward opportunities, right? Markets move between expansion and contraction. For example, we expanded and look at this tight little move right over here. I used the example today in the Discord, ITB, right? Started off pretty good on the year. I didn't trade it, went volume up. Okay, awesome. Now look at this tight consolidation as it's pulling back into a rising 20, 50, 200, last year's VWAP, and volume's drying up too. So this to me, like if I enter right now, I feel like I can get a pop. And if it drops below this, I get out and I wait. Like I don't care if I'm wrong, right? But this would at least tell me, say, okay, this is the type of setups that I look at, right? Strong moves to the upside, price consolidates, pulls back on lighter volume. I'm looking for continuation and expansion of volume and price. You want to talk about the Buffett indicator? Yeah, that thing is like what, 2+ standard deviations away, like where it's at right now. Historically, 2 standard deviations. Zeta, Hut, Ookla. Okay, Tesla. Okay, give me a second. I'm gonna go fast here because we got 5 minutes. Yeah, Tesla. We have an earnings move, so there's not much to go on there. $25.61. I might stay on for that actually, just to see. Is it today? Right? What else is reporting? Is anything? I gotta look at what's reporting. But yeah, Tesla. I mean, like I said, I'm bullish, but I don't have a position. But I'm bullish most of the time, so it is what it is. I don't necessarily think that Tesla's going to have a great report. I just feel like the market, it just looks like a good chart setup. But I'm not buying it. I'm not trading it. I'm waiting for earnings. I'm not gambling. Okay, that's not what I do. Yeah, Marvell. It's not horrible, but just we're really range bound here, right? So pop up, consolidate. Maybe it sets up for a move back up to this upper area here. Interesting volume profiles too. You got some good volume here. Volume dries up, pops a good green. This was actually an up day there. Then it consolidates, get a little pop of green, and now volume's drying up here. So it looks like we're probably setting up for some sort of a move here pretty soon. MRK is a healthcare name. Also, yeah, this was one that, right, once again, I was looking down here for MRK, right? When it was getting back above these averages, when it was consolidating, getting tight, kind of did a shakeout, rallied higher, another nice pullback over here on, tighter volume, and a move higher. So now it's like, now I need a little bit more of a consolidation, right? After a run like this. So pull back into the 50, tighten back up, set back up, give me something. But right now at this exact moment, I just kind of want to see what it does. Like I wouldn't mind buying it more up here, right? Versus trying to guess here and then maybe guess there or whatever the case is. But, if I was to buy a strong uptrend, I'd be looking at its expected moves. And maybe if it had like a 2 standard deviation daily move or outside of the weekly expected move or something like that, by a good margin, I'd be like, okay, now I'll execute a little bit into it as a starter position. But because it's going down, I would be starting very, very small. It could not be a big position because I'm going against what price is doing. ASML, yeah, it needs consolidation, but obviously pretty big reversal today, but bullish overall. But yeah, definitely needs to see that consolidate. Pins had a 2 standard deviation move the other day. I think I may have tried to trade this. I don't know if I did or not. I don't think I did. And then we're seeing another big break today. Yeah, you'll probably see a bounce here in the near future with pins. But once again, it's a pretty bearish breakdown. Oh yeah, I think I did trade it over here. You even see the little green mark where I marked it. So I did trade pins. Okay. Microsoft catching a little bit of a bid back. It needs to tighten up a little bit here. We sold off hard. We bounced back. All right. Bros. I like Bros for the consolidation now. I'm waiting to see if it gets back and reclaims last year's volume weighted average price. Right now it's just consolidating, but we broke down after a contraction here. So for me, now I need to see price prove itself. I think I had a position. I can't remember where, but then I got out. Yeah, I don't have a position anymore. So now I'm waiting to see if it firms back up for Bros. All right, 2 minutes. OSS. All right, this one looks pretty good. What's the volume, though? Okay. So OSS, is this like
just according to reports, Motiva restarts large coker at Powell
information technology
refinery.
Yeah, I mean, so here you go. Like now, like that's actually a tradable look, in my opinion. You have a big move up on good volume, and now look at prices coming in, and volume is like turning into nothing. So yeah, for me, this is actually something that looks interesting. I'm going to make a note of this one. I actually might even put this in a trade idea area. Make a note of it. How do I make a note? OSS. All right. I'm going to go ahead and put the music on in the background here. So far we have, we're slightly above the volume weighted average price here in NQ since the announcement. We've just been chopping. Fed will be on here shortly. My news feed will probably pick it up before me. Let me just refresh that. Okay. Yeah, so that one looked pretty cool. Iran. Yeah, I mean, this looks pretty strong too. This one's actually kind of breaking out of a little consolidation right now. So I'm not much of one to chase, but that, you know, it's starting to break out right now. Not a horrible look there either. Yeah, Carvana, we've talked about a bulk of it today. We were looking for some intraday. Oh, that was interesting. I just got my first extreme reading on the tick chart. So let me get over here. Whoa. Okay. We got the Fed coming up. All right. Everyone pause. Everyone. Here comes Jerome. Jeez, they slammed that thing.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates
He's just
based
reading
on
off
the
what
Consumer Price
we
Index
already
indicate
have
that
sent out. So
total
we're watching
PCE
a
prices
couple of the
rose
assets, okay? Dollar's
2.9%
coming off a little
over
bit.
the 12 months
Gotta
ending in
see what kind of
December,
questions he answers.
and that excluding the volatile food and energy categories, core PCE prices rose
This is the dollar.
3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 3/4 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Not bad. Markets responding flat.
Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace.
I want to hear questions about the dollar.
So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really 2 questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over.
Oops.
We thought we would take that language out of the statement.
Dollar's coming off here on that.
Nick.
Nick Timrose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to, this is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today.
Dollar dropping a little bit, 10-year yield coming off a little bit too.
Why would you
Sending
want
silver
to
up.
leave it all under the circumstances?
Again,
Back above daily VWAPs, got a nice bit back there.
I don't want to get into this. It's not something I'm.
Not too far off the high of
there's a
today's
time and
trading
place for
session.
these questions, but not something I'm going to be getting into today. Thank you.
Copper slightly down, but catching a bit here too.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might,
Trading around the
Interesting
VWAP from the
answer.
Fed announcement and meeting underneath. Obviously, can get a little
We've
bit more
seen
dangerous.
quite big movements
there
in the
yet.
dollar over recent days.
Here's a dollar
What do you
question.
think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So, I have nothing for you.
But, what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with
dollar's
Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting,
You got the question. No response.
clear improvement in the outlook for growth.
He's
The
good at-
data have come in, and sentiment, the beige book, everything comes in suggesting that this year starts off on a solid footing for growth.
It'd be funny if he said something like a yo-yo.
Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting, we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based
Yeah,
on
he's
the
not saying
incoming data, the
anything.
implications
He knows.
for, and the implications for, and
He knows
the
that'll
outlook
cause
and the
even more
balance of risks.
volatility.
Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer, thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the S&P and the longer run rates, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by one, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course no one knows with any precision. So if you had a follow-up.
I get what you're saying, but
I get what you're saying, but
officials have described the Fed being in a mode of bringing it
Bond's
down
catching a bit of a
eventually
bid
over
here.
time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%.
And Q not really moving.
So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the
Silver saw
data.
a nice bid back.
We're not making decisions about future meetings,
Gold's
but we
near
do
its highs
think
of
we're
the
well
day.
positioned after those 3 cuts to let the data
Looks like it's
speak to
going
us.
for the high.
Amira.
Thank you, Chair Powell. Mara Mokway from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the
Carvana
conditions that would
trading at
merit
near and
another
around
rate
lows.
cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify
Could be choppy
them.
right
And
now
so there are
until he
different views
pulls
on
the plug on this
committee, and,
meeting.
We'll find our way forward as the
We
data
might get a little bit
evolve.
of a release valve. I can't trade this.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a hard problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see
Hey, Exotic, sorry, I forgot
the
about your
effects
question. I'll look at that in a second here.
of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff
Building
increases
pressure
that
here
that are begun.
in NQ, in the
And that's
market.
what we expect to see over the course of this year.
Ranging
If we see that, if
slightly
we
above
see
the
that,
VWAP from the announcement.
that would be something that tells us that we can lose
Flat
some
on the
policy.
trading session for
Also, if
SPY.
we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say.
Getting a new high
And,
tick since the initial
again,
announcement.
we think our policy's in a good place.
On NQ.
I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, a minute ago you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean,
QQQ is trying to get back above daily VWAP right now.
At all of the both survey and market-based short-term inflation expectations
Still trending
have
down,
come
so
way
maybe
down.
if it tightens up a little bit here, it
They were
looks
in a good place at the beginning of last year. They
kinda range
spiked
bound, but
around Liberation
testing
Day,
the daily
and
VWAP.
now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew.
Seeing if Carvana will break to new lows.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
Dollar's still down.
You're right.
Hitting new lows from the initial
We saw
start of
the
this
labor
conference.
market weakening, and we acted. And I think that was the appropriate thing to do. We will always
quite
act
bullish for markets,
to
or at least right now
address
it
what
is.
we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside
Market
risk
net
to
flow is not
employment,
really
a
all
little
that great of a
less.
component right now.
I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments, too, on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it
Ravana
isn't
looking to
anybody's
break new
base
lows.
case right now, anybody's base case, that the next move will be a rate hike. But, ultimately, we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria.
NQ looks like it's trying to go for its opening range again.
Hi,
It's holding
Victoria
up.
Guido with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot, really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment, and so the fiscal picture needs to be addressed.
Near it.
And it's not really
Still
being
looks like it
addressed.
wants to go for its highs of the
That's
day.
important. I'm not in any way
Silver,
connecting it to some
nice
sort of
bid back here as
near-term market
well.
event. But ultimately,
Copper went
it's
positive
something we'll
on the
have to
day.
deal with, and that in the end,
Qs are up 50 basis
that's where
points.
you wind up.
10-year
is
yield
in some kind of a
off a little
difficult
bit, but
thing.
still up on the
that's not
trading
where we
session,
are.
and
It's
the
not what
dollar
Japan
up
is
slightly,
either.
but coming down since you started
certainly
talking.
not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer-term rates means less accommodative financial conditions. But
Yeah, I'm looking to see if
many
Carvana will break
things
lows and
move
flush
longer-term
further.
rates. It's not,
Still can
and
potentially
it's
create
not
some sort of
mostly what
opportunity
happens
here.
on the short end. There can be effects of longer-term rates from our moving our policy around, but it's much more. Assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at
Based on
and
its
find
implied
periods
vol.
where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator,
Is
and
OSS
what conversations have you had
I made
with
note of that
the
one.
senator?
I've got nothing for you on that.
More broadly, what would
Still
happen
looks
to
good.
American households if the Federal Reserve loses its ability to operate independent from
Almost makes me want to
politics?
take it. I'll wait till end of day.
So really, the point of independence is not to protect policymakers or anything like that.
I mean,
It
this thing
just is
moves
that
like,
every advanced
I mean, just to hit highs of the
democracy
day would be
in the
5%, so
world
it's very volatile.
has come
thing,
around
right?
to
It's-
this
It can be
common
down 5% and
practice.
not
It's
even
just
look
an
like it was
institutional
damaged.
arrangement that has served the people well,
You
and
gotta
that
be
is to
very
have a
careful with those
separation between
names.
to not have direct elected official control over the
Just a
setting
YouTuber,
of
not a
monetary
trader.
policy.
I'm
And
verified in the
reason
United
is
States
that
Investing Championship
monetary
for the last
policy
3
can
years.
be used, through an election
Sounds like
cycle
you're just,
to affect the economy in a way that will be politically worthwhile.
loser.
So this isn't, I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, it's, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Show my colleagues. I think gold just hit its high for the
The
day.
Economist. On that sort of stabilization of the labour market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labour market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt.
Dollar's still coming off
from
since since Powell started talking.
Clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. You know, supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, you know, it shows, it's a survey showing that workers feel like job availability it's a very low reading. Just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. You know, so imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, you know, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? You know, it's a challenging, it's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook, your strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially the economy has once again surprised us with its strength, not for the first time. And, you know, consumer spending, although it's, you know, it's uneven across income categories, but consumer spending overall numbers are good. And we're benefiting from the, you know, from the AI build out of data centers. That's another thing we're benefiting from. But the economy overall, the growth is on a solid footing, it looks like, and it's not just those things. It's just the consumer is filling out, you know, surveys that sound really negative and then spending. So there's been a disconnect for some time between downbeat surveys and, you know, reasonably good spending data.
So basically, don't pay attention to the surveys, is what Jerome Powell just said.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending
I've taken
over
some
time.
trades today.
So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from
This meeting is going to end right here.
retailers, for example, that serve lower income customers, whether it be food
We'll
or
see
the
if the
big
market
box
wants to
stores or anything. They're saying
its
the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and
Seeing a little bit of volume starting to pick
that
up
is a
here in
reality of what we're seeing.
Carvana.
They're still consuming, but
pockets here.
they're feeling it in a different way. I would say more
Do
broadly,
have the higher low.
on affordability, we
higher high
have
yet.
a vast network through the reserve banks and also through the Board of Governors, where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart, because one of our jobs is price stability, and so
Trade from here to here,
the best thing we can
2.5%.
do for
Crazy
people who are
volatility.
feeling that squeeze is to keep inflation under control, and frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build-out as being a positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
So
Silver reaching
everyone,
up to
of
its
course,
highs
is
today.
watching
Still not there
AI
yet.
and the deployment, and
It's kind of coming into its
trying
prior
to
little area of
understand
resistance, maybe a little
exactly
bit of
what's
consolidation
happening. And there's a wide range of possibilities.
Still trading
it's
within
hard
that
to
big
say.
reversal day, and then
and of
gold,
course,
new
anyone who uses
highs,
it
I
is
believe.
amazed at what it can accomplish, right? So
new highs.
every technological wave will eliminate some jobs
should be a
and
2 standard
create
deviation
other
weekly move for
jobs.
gold now.
And it's always been the case. If you look back, wave after
here.
wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over
2 standard
time,
deviation
it's
weekly
what
move for
it's what
gold.
enables incomes to rise over time, is rising productivity. So
SPY relatively
and
flat,
we
but
always ask,
SPY
well,
is
this,
coiling up
this
here.
is going to be different,
Holding its week
is
to
it going
date
to be different? And
volume
we
weighted
don't
average
know.
price.
And we may, in any
I wouldn't
case,
really
see
put
in the
this in the
short
category
term
of being bearish.
jobs that are being eliminated
Not
by
right
the
now.
capabilities of AI. We may see
Dollars
that.
falling, so the markets are
We
really
just
kind of
don't know what the
responding to
overall
this
effect
right
is
here.
going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between
Carvana looks like it's going up, back up to that
low hiring rate for
4
recent
standard
college
deviation level there.
grads and
Trying to.
AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Beyi.
Thank you, Chair Powell. Beyi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could
Man, this
elaborate
thing
how
is still
far we are
going.
from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening
I'm at the press
remarks,
conference,
we had
not the price
3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress, but the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly, precisely when this will happen. But there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But we'll be able to see whether things are moving in that direction. I think we'll be able to see.
Richard Escobedo.
Still down 18% on the
I'm
trading
Richard
session.
Escobedo with CBS News.
No new high or low yet.
Outside the U.S. about what's happening outside our
Sorry,
shores
higher
and
high
how
yet.
it impacts
You
the
have a higher
U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. Geopolitical risk for us is a lot of it is around energy, oil. And so far, we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, the economy, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
If anybody traded that down there, it's always
Thank
worth
you, Chair
considering
Powell.
updating
Jennifer
your risk
Schonberger with Yahoo
parameters.
Finance. With third quarter GDP
Which
growing
means
at
update stops,
4.4% and
partial
the
profits,
fourth
et cetera.
quarter
We don't know what's
expected to
gonna happen
have
when Jerome
a
Powell
5
gets off of this.
handle
He's
on
still
it
talking.
as to what the Atlanta Fed is predicting. At a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but there's growth and there's how fast the potential is growing, and at a time of high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. It was more in the mid-twos for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So there has been, you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end,
fast move from this little consolidation
the labor market data is more reliable.
So
GDP data is very hard to collect and understand.
Turn it into a swing trade.
Nonetheless, I think we may be seeing that.
We don't know what's going to happen when he gets off the stage. It could
too soon to
rocket
say
higher and come right back down.
Though.
It's all about kind of locking in if you're in it.
These
These levels, by the way, this
Chair
is a
Powell,
3 standard
after
deviation
today,
move.
You have
This is a
2
4 standard
meetings
deviation
left
move here.
as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is, stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is that, our window into democratic accountability is Congress.
Getting crazy
And
now.
it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, it's easy
close out a
to
search, Carvana? You just
criticize
got out there?
government institutions so many ways.
I'll
I will
share what
tell
I've been
whoever it
doing here in
is,
the background
you're about to meet the
momentarily. I'm
most
still kind of
qualified group of people you
working some stuff.
not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but
I'll
there
explain
isn't
when he's
a
off the
better
stage.
cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late.
He's not gonna comment
And I'm
on
wondering how much attention, if any, you pay to those moves, and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
But we do monitor them, he says.
Nicole, for the last question.
So why monitor them if you don't care, especially after a historic move? That doesn't
Hi,
make
Nicole
any sense.
Goodkind Barron's.
That doesn't make any sense.
Prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every
gaslighting's real,
FOMC
yeah,
participant
that's
writes down a forecast
so
every
funny.
quarter.
Yeah, we do pay attention,
Right,
but
these
I'm not
summary
concerned.
economic projections.
Historic
And that's the
moves,
basis
volatility's
for
insane.
how we think about the economy. So, and the other thing is,
Crazy.
Maybe
he's telling the truth, but I don't know about all that.
Is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And
I
it
have
can
a
tell
short
you
on
if you change
gold
one of those
from this morning. I
variables,
took
this is
some
what should
profits in
happen
the
in the
first
macroeconomy. That's just the way
probably
it works.
hour of trade,
However,
and
the
now I'm
structure of
looking
the
to
macroeconomy
potentially
is
structure
constantly
again.
changing. For
I think I might
example,
wait
we
till
hadn't had a
close to
pandemic
see
in
if we can
100 years. It
press
wasn't in
higher.
the model. And we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years.
Carvana.
And so there's great uncertainty.
This Carvana move here, I think, has already made me more than what
Another
the
thing I'll
gold
say
trade is even really
when it comes
focused
to,
on at this point.
Technological developments that raise potential output, some kind of technological revolution, like happened in the 90s here, and like maybe happening now with AI. We're all over that, and everyone studies
So
those
we're
periods.
stone's
and,
throw away
we're
from the
very
Daily VWAP,
clear-eyed
just so everyone
about the
knows if you're not out
possibility
already.
that this higher productivity
But just
may
know that
persist,
a strong move up, it's
and
going to
also
get,
that it may
you're going to have to go
not.
through pullbacks.
We're not.
right?
No one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth,
I thought he was
labor
going to be
market,
done
and all
with this
those
meeting. I
things.
was going to share
That's
with you
all in
what I
our
did over
models.
here.
I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
Always looking to do better.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements,
flows
threats,
still don't look all that
negotiations are all
great,
frequently
but price
changing.
actions
So I'm wondering
holding
how
up.
you actually track these, what
Choppy.
data or channels are most critical to follow this in real time.
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing.
I wonder what the dollar's
and
going to
on
do when he stops
everything.
talking.
And so you build a model up from all of the tariffs. At the beginning, it
This
was
move
very much of a
in these
forecast.
precious metals
now it's
legitimately is from here to here
every
when the dollar
cycle that
dropped.
goes by, it
Basically,
becomes
actually, from
more
here,
informed by
11.
actual data. And our forecasts were not far off. What changed was,
Right
as I
here.
think I said earlier, what changed was what was implemented was
From 11
smaller
there,
than what was
and then you
announced.
see the dollar.
In addition, we didn't
It's
see
just
retaliation
responding,
internationally, and I think people did
rotating,
generally expect that because
11
we
is
saw
right
that
here.
in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer
back to
would take. And
Carvana.
it turns out it's a lot of companies in the middle who, by the way,
Anybody trading
are
this right now,
pretty
or try
strongly
trading this?
committed to passing the rest of it through,
Or
which is one of the reasons why we need to keep our
I was
eye on
hoping to see
inflation
some sort of a
and not
flush
declare
to
victory
actually do some
prematurely.
day trading size. Once again, I'll walk you through it here.
Okay. Thank you very much.
You didn't miss anything. Okay, there we go. Oh my goodness, he's done. All right, let's see what these markets can do. And I'll walk through kind of the Carvana thing. I still actually have a little bit on, so. You traded the bounce. Nice. Nice little catch there. You're trading it. Cool. I wanted to see that next flush too. So I didn't buy down here. I was looking more over here, but I'll walk through the setup. The flush itself would have been nice because I could have maybe looked to get some more size on a turn back up. But whatever, it's still decent, especially as the gold trade is, the gold trade is set up as a swing trade, so it's minuscule compared to what I just did with Carvana, but. Here's Carvana. Almost $2,000 on Carvana. Not too shabby. That's the daily P&L. I've cut the position probably 90% or so. So if I wanted, I can just keep it as a swing trade now and see if it just bounces overnight. It's going to be a green trade for sure, no matter what, despite if it even falls significantly from this point. I don't really know about Carvana of where it's going to go for the week. This type of move, it creates volatility two-sided directions. So I don't really enjoy holding it overnight unless if it's a very small position and I'm already in the money. Like I'm not going to start a new position in Carvana at this exact moment and hold it overnight, especially with any size. It'd have to be tiny. So the only time that I can get some size on is day trading. And if it's in the money, I'm like totally fine with holding it, especially if the chart looks bad. But yeah. I mean, it looks like it wants to go for right in this range over here, so we'll see if it can get there. I don't see the need to cut down my position anymore at this point because it's only 10% of it is left. So we can come right back down to here and I'll still be in a very, very good position. I don't want to lose that, but that's just kind of the reality of it there. Thanks, Big. All right, let's take a look at the Qs. NQ, right now it's putting in some higher lows. It is above the VWAPs from the announcement. I mean, doesn't look bearish, right? It looks like it wants to come back up into and around the lower opening range here. That's a 30-second opening range. S&P 500 still holding week-to-date volume-weighted average price here. No real response in markets, still a wide open range of risk. We'll see if we can come to any of those levels. The big moves are happening in the dollar, and the precious metals. So gold up now just clipped it to a new high. And then silver also should be nearer that high too. It didn't quite get there yet. Dollar is from the Fed announcement, from the Fed press conference, basically straight down. We have Tesla reporting right after the bell, I believe it is. Let me see here. See if I got that right. God, for some reason, I think all my earnings calendar stuff was weird and it was like off. 128 after the market. All right, all right. So that'd be fun to watch. I didn't really trade any futures today. A little couple scalps here and there, but that's about it. We'll see maybe if things open up. We did have a low tick reading, which kind of marked, I think, the bottom of the day. So these are the type of extended readings that I look for, these low tick readings. That happened at 11:30. That was when the press conference came out. So you can't really do much with that. But 11:30 was, I believe, right. Where was 11:30? Was it right here? Yeah, 11:30 was this candle right there, which was a low point. And then it reached to a high point, and then it came back down. So it's kind of volatile, right? It went boom to boom, right? Very quickly. Plus 100, yeah. Natural gas. I don't really touch natural gas all too frequently. Every once in a while, I'll put on a little trade, but that thing's all over the place. It's not really a thing to trade technically, from a technical standpoint. I mean, from an extent, you can, but you definitely got to volatility adjust those positions. All right, we're getting pretty tight here on NQ. Let's see if anything is opening up here from 69.60, 69.85, 69.50. No, not really. It's just not that clean for me to say, yeah, I'm super confident here. 695. So maybe 698 can have some. All right, well, 698 could be a level of contention here if we squeeze up higher. Expected moves were dead. I mean, it's trading within its expected move, so it's technically it's correct actually, right? It's well within its one standard deviation of risk. Most of the time, we go and tag them because you're basically averaging options from above the strike, below the strike, and so forth. So you do get pulled to them pretty frequently, and then it dances around, and we still might. Give me a second here. I might need to I'm not going to hop off the stream. I think I actually want to see Tesla earnings. So we'll map out the expected move for Tesla. I'm going to change up my edit stream info. Tesla live earnings. Market reaction. Tesla. Okay, so Exotic, are you still there by any chance? Because you had asked me a question and I forgot to answer it. You're saying something about trying to find out that I thought was in one of my recent videos I haven't seen since, something that I haven't seen since 2014. What was going on in 2014? I'd have to think. Do we know what asset it was or anything that we were looking at? Off the top of my head, I cannot think of it. Yeah, I can look at ARM. I think if Powell was more hawkish, I mean, he didn't give us anything. I feel like the dollar would have went higher on him being more hawkish, but this thing is kind of just tanking here. Which is helping the metals. Gold keeps on pressing higher. Gold keeps pressing up. Let's see where it's at. So this is outside of a 2 standard deviation weekly. It honestly looks like it's going for the 500. So I would say, because I initiated a short probably midway through this bar, and then when it was basically dropping, I took out 25%. I think if I was to reestablish that 25%, I would want to see it through potentially 500. If I even want to bother with it anymore. Carvana just made that trade. So you did super chat for SMCI earlier? Whoa, thanks. I didn't see it. I gotta go back in my settings and see it. I must not have saw. For some reason, I must not have saw it. Did I not see it? Let me see here. I must have missed it. I don't know. I don't know if. Oh yeah. Hey, thanks, Shane. I see it here. 58 minutes ago. Thanks for the super chat in SFCI. I don't know why I didn't get notified, or I must have just not have heard it. Q's rejected from the weekly expected move. The red lines right now is starting to tank down, which is not necessarily a bearish sign, but it's still in a bearish divergence. Q's, I think I have those marked on my screen right here. So let's look at the Q's weekly implied move. Ignore this level because that's not the level. Go properties. We'll pull up the Q's weekly implied move. Yeah, you're right. Right there to it. Surprised my alert didn't hit me there too. So yeah, Q's came up to its weekly implied move, tagged it nicely. SPY did not. Not yet, at least. Still got time left. So the initial reaction was quite bullish, but so far the market hasn't moved anywhere. And now we're pulling back into the VWAP. So the initial reaction sometimes has to get digested. So I wouldn't really be too bearish. I wouldn't be too bullish. I'd be more neutral than anything, at least at this moment. This is not really a time where you want to press anything too heavily. The dollar's still dropping here, which is quite bullish for risk on assets at least. Sorry, I'm just responding to something in chat here. $3.5. Gold is just screaming right now. Look at this go. Like I said, I think this is just going to 500 at this point. I think it's almost a concrete. Silver looks like it's going for another high. Yeah, I think it's going to take out today's high here too. I think that's happening pretty much right now. see here. All right, there's silver hitting a new high for the trading session. I'm actually pretty shocked that silver is underperforming gold at this current moment. I feel like that might flip here. MicroStrategy, let's take a look at some of the Bitcoin related stuff. Yeah, Bitcoin related stuff is just ain't doing nothing. This is one that I look to trade, and I traded it, but got out of the bulk of the position there. Kind of have to at that point. You sold some of the physical gold yesterday. Nice. I mean, it's always something in hindsight, right? That's the problem. Like, I think there's a good chart on Isaac Newton where he like, dang it, I want to see that. Isaac Newton in the bubble or something like that. Let me see here. The South Sea stock bubble. Yeah, this is funny. Watch. Let me see here if I can get it to you. I think I've shared this before. So, you know, on your comment there, Christopher, about this, you know, selling or whatever, Newton invests a bit, he exits, gets happy, but then his friends get rich, and then he re-enters with a lot, and then he goes broke. You know? So you exit, you're happy and everything, but then you're looking at other people, and then you're like, okay, now I got to get back in, and oh no. Don't want that happening to anybody here. It's a pretty common theme, though. Oh, ARM. Yeah, I forgot somebody had mentioned ARM. Let's take a look. Yeah, I mean, this is not a good looking chart at all. So it's a good day trading chart, right? When you have price action moving, but so far on the daily time frame, I mean, you buy right now. Where's your stop? You have earnings right around the corner. Like, what am I supposed to do with this? You know, saw a couple of days up. It was gapped and go'd. Nothing tightened up. It came sitting right back in. Pretty much flat for the year, though. So boink, boink. So for me, you know, there's nothing that I can really trade here. Maybe like, you might say, hey, if it comes here and it bounces up and it gets like this, maybe people are gonna say it's an inverse head and shoulders, and it'll probably break and try to gut for this. So we just got to see what price does and how it tightens up in and around those areas, I guess. Dollar's still coming off, still up on the trading session, but from those initial remarks, down. If the dollar starts bouncing, it'll probably pause out gold a little bit here. But overall, quite bullish. NQ coming in a little bit. It's now below its move, but overall, below the volume weighted average price, but overall just kind of just stagnant. Nothing's going on here. The big moves right now are happening in the metal space and the dollar. Let's take a look at the bonds. Bonds yields came off a little bit too, which helps. Let's see if oil's coming in at all on this move. No, oil's keeps on pressing. Let's see here. Energy, one of the higher performing sectors. I'll go through some of my charts. Yeah, so tech's leading the way, but right behind it is once again energy. Why did XLK get deleted? What is going on here? Oh, that's why. Yeah, energy's right below it. Gold's almost up 4% on the trading session right now. This thing is screaming on the back of those remarks. Let's see if silver's going to break through the new highs. It did for the day. After it went to 105, so we're almost near a new high, all-time high for silver. Not quite there yet though, but 106.70 would be the new all-time high for SLV. That's up here. To the right. Carvana still moving. It's at that VWAP, trying to get its little head above it. It might be coming to a peak. I wouldn't go too heavy on shorts if you know, you can wake up tomorrow and this thing could be down 5 or 6% in a day. That's just what the volatility is pricing in right now. So, you know, on the flip side of that, it can also be up, you know, right through 500 very easily. All right, looks like we're trying to come back into this 3 standard deviation level here on Carvana. Anybody still in that trade? I still have a little bit on. I think I might actually just trim just a hair more. I don't know why. It's already such a small position, but man, that's just crazy. Yeah, I just trimmed 50% of what was remaining, which was only 10%, so legitimately only 5% of that left. I will grind that I sold Carvana. Oh, I don't care if this thing fully recovers. It doesn't bother me. Yeah, I would never hold the amount of the amount that I do day trading overnight. It just would never happen. Now I can hold this and forget about the trade at this point because it's so small. But whatever. Nail. What's Nail? Isn't that like a 3x something? Home builders. Yeah, I looked at ITB. You know, once again, this one looked pretty good, but now it's reversing here. So we'll see where this closed. But I liked how it started off and then how it was coming in tight. So this is one of the trade ideas that I'm looking at. If it breaks these lows, I'm not interested until it turns back around. And I don't love how it's squatting here today, but the market's kind of sitting in right now. And really the only thing moving is silver and gold, despite a few other things, right? But those are the big movers in oil, commodities. And it's coming off of, you know, just the recent move in the dollar. Silver just now surpassed gold as far as the daily performance. I had a feeling that that was going to happen. And it looks like we're going to try to go for a new all-time high in silver. So we'll see if it can make it today. Zeta and Oscar. Yeah, we can look at that. Zeta. A little bit too loud and noisy for my liking, but you know, it's kind of just channeling right here. So maybe if we tighten up a little bit in and around this area, it opens the door for a pop higher, but I'd be kind of more cautious underneath this level over here, 1930, in and around there. Oscar. I've seen this set up a few times, but this is like what is this? It has to prove itself here too. And that's the thing is Oscar can be up all the way up here tomorrow or the next day or the next day. It's just all over the place. It's a little bit too choppy for me to trade. I remember looking at the weekly chart and I was like, it was looking really good in this kind of like base, but it's been going sideways here. So a little bit too difficult for me to pinpoint entries. What's up? I'm doing good. Felipe. Every time silver and gold acts like this, reminds you going into the bear market. Well, I'm pretty sure that that's what happened, right? You go to gold, you go into, let's go to the weekly chart, And yeah, going into the financial crisis, it was flying up, flying high. Yeah, so that was in 2007. Oops. Then we go over to 2007 here, go to mid 2007. And mid 2007, right over here. So gold was firing off like this, and then this was basically coming back to back test, and then that was the financial crisis. NQ just slopping around, and then still we're just pressing highs on gold and silver right now. It just keeps on going. So again, it looks like it's going for a 500. FCA, yeah. But, does it usually sell off? I mean, I'd have to go and look just to confirm it. Dollar still breaking down here, and then silver 4% on the trading session. Once again, it looks like it's going for new highs, new all-time highs on silver. Yeah, FCX, is that copper mining, right? You know, it's up there. I don't like buying stuff that's moved like this without consolidating, but you know, I like to look for more tighter consolidations like this stuff. So I would be looking for this thing to consolidate or something like that. I'm not interested in shorting silver yet, or starting a short in silver. I would prefer it a little bit higher. Gold is more interesting to me, so I started a small position, sold some of that position, and now I'm looking to see what the close looks like to potentially go add that back. But I'm thinking just over 500 would be the more accurate reading for me, and if I don't get that, then it is what it is. Because we're just like right there. Big kind of round number there, you know. Stone's throw away. It's crazy to think that like it's right there, but it's also, you know, it's a percent higher, but like it's moving that much right now. So it's crazy. Nat. Nordic American Tank. I don't know if I can put this in the bucket of a high type, but I mean, it is. I would say that this one's flagging, yeah, and it's starting to kind of move from this now. Yeah. High type flags, I like to see like 100% like move, like real quick. Is this 100%? Maybe it was. Yeah, it was like 25%. No, I look at GC too as well. I'm just looking at GLD right now. You look at both. Let me go back to Carvana. Did this one kind of back off a little bit from that hit? Yeah, good. I was smart to sell just a little bit there for now. Thoughts on TAC? Don't really know. What is this? Utilities? Electric energy. I don't know. Some of the utility names haven't been looking all too hot, but I mean, this doesn't look like a horrible chart. This is kind of breaking out here, and it's the 20 days trying to slip back up. The 50 days still declining, but it's above the 200. So I don't know. Maybe if this can go sideways a little bit and set back up, it'd be nice. Like these are the type of setups that I like, right? When I'm looking at these little tight moves pulling back from already a strong move. Those are the type of ones that I prefer. Lemonade. I mean, that doesn't look all too shabby. Breakout, consolidation. I I mean, it looks like it's going for 100. We were 10 cents away, right? Palantir, I talked about this one earlier. It is pulling into the 200 that's inclining, but overall this thing has been kind of just going sideways. So this one needs to prove itself before just kind of blindly entering in here. You got out of Carvana, 1200. Nice, nice. That's a great trade. I still have a little bit left myself, but yeah. Tiger is an interesting China equity, but it's like super volatile. So it's like one of those high octane type names. So there's been instances where I trade it, but the overall chart doesn't look all that great, right? Looks like silver's hitting that new all-time high. It was sort of like a stone's throw there. Come on, just get there. New all-time high in silver around the corner. That would be crazy if this thing just like dumped right back down. Like, yike. Yikes. Halliburton. Yeah, so Halliburton was one that I was looking at over here, right? Why? Because I like the tight price action. The averages were starting to move up. We started seeing higher lows. We saw some volatility and a move up higher. So yeah, now it's starting to trend higher, but I don't just enter in right now. I need to see consolidations, like something like that, right? So I need to see the consolidations. Hey, thanks, Option Swisson. Silver will be 202 weeks. I mean, could be. I mean, I wouldn't put it past it. The way, I mean, it's up 64% year to date so far, and it's only January. You know? You never know. But that's the thing with silver is I can look at silver and I can go like this. I can go to the trade tab. I could say, yeah, it could be $14 lower in 7 days. Which really isn't anything, but $14 lower could be just right back down here. Or in case of this, where you said, yeah, 2 weeks. So 2 weeks, that's 14 days. So $19 expected move. So $19 expected move. So if silver keeps on going, one standard deviation would be to 125. So we'd actually quite literally have to go like, yeah, like 5 standard deviations of what's implied right now, which is obviously pretty rare. We need a Carvana to the upside in silver. It's like pressing it. It's just like, eee! Help me. Thanks, Chris. Massive, massive. Did we get a lower tick level report? Yeah, I turned off my alerts because it was loud there. It's coming into the close. So that was the 10-minute marker. So right here was when Fed came out, and then this right here was, unfortunately, it was the MOC. So I don't really like to use the tick in these last 15, sometimes even 30 minutes of the trading session. Doesn't mean it doesn't work, but just be aware that this came off of the MOC. So you get that dramatic move, 10 minutes, right? The algo trade, 10 minutes right before the market closes. Dollar just keeps on continuing to sink here. All right, come on, silver, get there. It's like right there. I appreciate it, Cameron. It's basically a new all-time high. If it closes here, it's a new all-time high. Let's give it that. These type of moves, like it's crazy. Like you'll get like pullbacks like 50% like very quickly. It's just crazy to me that if it pulls back 50%, just this little move right here on a minute chart is literally 1.5% on silver. Crazy. Crazy, crazy, crazy. Just this move right here was 2.5%, like 2%, almost 2.5%. This is a minute chart in 27 minutes, in 30 minutes. Talk about volatility. Excuse me. Volatility at its finest. Yeah, I've been hearing that, Chris. You get a lot of news during these volatile times, and that may be the case. We don't know how the dollar is going to respond. Like, what happens if everyone considers that really bearish for the dollar, but yet it reverses on that news, or when it actually happens? Like the market's pricing it in, and then all of a sudden it reverses. That could be bullish for the dollar at that point. But yeah, overall, that does sound quite bearish for the dollar, which could be great for risk on assets. But that's the thing is, how much are they willing to really let this dollar fall? And I'm just comparing it to 2018, and it typically found a bottom right there in February. And I don't know if that's going to be the case this time or not, but I also remember how volatile the dollar was going into going into February and late January in 2018. It was crazy. I would say this is more crazy, though. All right, we got Tesla after the bell. I'm going to pull up Tesla. Choppy, choppy. Choppy, choppy. We are looking at $25.71 of expectation. Ladies and gentlemen, place your bets. Wait, what did I say? $27.50 something? $27.71. $25.71. $25.71. That's one standard deviation, 25. I'm gonna do that. Rough. Rough and dirty. Ah. I'll adjust it later when we get more of a close. But we're basically looking at roughly at about, 6% or so to the upside, 6% to the downside. That's one standard deviation. I don't know where price is going to close exactly, but that's what I'm looking at right now. Expectation of silver after not getting a pullback. I think we're still getting a pullback in silver. This is, it's wild behavior, but you got to, when you look at the implied vol for silver, you got to just these are normal moves with this high of an implied volatility. So if you go too big in a position, people get freaked out about these moves, but you need a volatility adjust if you're trying to do anything here, go long or go short. If you don't volatility adjust, you'll be torn to shreds everywhere. Like, look at this, right? Once again, I'll go back to the implied volatility is at 106%. Go into the options chain. The options chain right here, we're looking over hundreds, all of these. These are higher implied volatilities than Tesla right now, and Tesla has earnings. Tesla has a 99% vol. Silver is higher. It's higher than every big market cap name that we have here on the S&P 500. It's crazy. I feel like people aren't just grasping that. Silver is mind-boggling implied volatility. So this is where you can see crazy squeezes, and that's what we're seeing. And then you could see complete implosions too. So there's going to be people that try to time it perfectly. My thing is, if you're trying to catch a short, just know that this thing could keep ripping, so you better start very tiny, right? And just think of it as just a piece of inventory. You don't want to go net in a portfolio right now in like a short silver trade. You can blow up. You can also do really well, but you can't control that. So what you can't control is not blowing up. I don't want to blow up. I don't want to blow up. All right, come on. That was your little pullback. Let's fire it back off. Dollar's still holding down here. Let's see what Q's did. NQ, SPY, nothing burger. Q's, flat. SPY, let's see. Still a couple of days left to see if we can hit the upper expected move. Weekly expected move, and we're holding the week-to-date volume-weighted average price. So still would suggest that price action can head higher. If we start crossing below that, I'd be more cautious. But right now, the reward would be more trending up there. You're also above a rising 5-day moving average. So the shorter-term average up there as well. Maybe it'll save it for after night. After the close, it'll save it for creeping up there 2% again. And if you're long silver and still long, just expect to see days where you're down 5-6%, right? Or gold. I wouldn't consider that bearish by any means, right? If you get a hit down, like imagine if silver came down almost 9%. People are like, oh my God, it's down 9%. It's back to a rising 5-day moving average. Legitimately where it was a couple of days ago. Nothing. All right, we got 2 minutes till the market close. We'll look at Tesla when they report. QS, what's QS? Is that quantum? I was actually watching this over here on this kind of tight price action, but I never got an entry in, so I never traded it. But now that it's below last year's VWAP, it needs to prove itself. It needs to come back up here and kind of doodle around, maybe the 50-day to flatten out a little bit. And then I'd say, okay, maybe we can look for another pop-up higher. But right now, I'm not interested at these levels. But it is getting tight, so we'll probably see some explosionary moves. Whether that's to the upside or downside, I couldn't tell you here in the near future, though. I don't know what this is. Sheesh, everywhere. Okay. Can't forget this. Can't forget this. All right, let's still go back to Tesla because it's reporting earns. Let me see here. Whoa, hello. Jeez, what was that? Right into the close? That was fun. Okay, so it's going to be down just a little bit more. This means it's going to be down just a little bit more. Okie dokie. Tesla reporting earnings. Got a $25.70 expected move. Oh, $25.30 expected move. Slightly lower, whatever. Now I'm being picky. I'm just leaving it there. Okay, there we go. So there's the expected move up to and around 455 to 460, down here to around 410 to 405. That's one standard deviation of risk of what the market's pricing in. Is Microsoft and Meta reporting earnings too? Geez, why is my thing not populating this? Is this legit? I gotta switch my thing. I'll pull those up here in a moment. I think my earnings calendar is completely off. I need to go back to the Whisper. Yeah, Microsoft Meta after the close. What is going on here? Why didn't it show? All right, let's pull up Microsoft. Microsoft reported earnings just now. Its expected move was 25.82. And we just hit our lower expected move there for Microsoft. Wait. 25. Yeah. So we're underneath the one standard deviation move right now for Microsoft. I'm going to extend this to the left, extend it to the right, and then I'm going to go get the other one here, Meta. Meta's expected move was 46.61. Basically right here. Okay, there's Meta's expected move. All righty. I don't know if we got earnings for this one yet, but I'm going to go ahead and make sure my we can listen to it here. Microsoft did report 5.16, earnings expected 3.92, revenue 81, expected 80. Poor response in the market.
I'm just going to see Tesla report here. They do report revenue of 24.9 billion. That is shy of the expected 25.1 billion. Just look at here for the rest of the metrics from Tesla.
No response yet, really.
And just seeing the adjusted EPS figure now for Tesla, that is 50 cents above the expected 45 cents. So that was a miss on revenue, but a beat on profit for Tesla. And in commentary, Tesla do know in 2026 they'll further invest in the infrastructure needed to support clean energy, transport, and autonomous robots. First generation production lines for Optimus are being installed in anticipation of volume production. Cybercab, Tesla Semi, and Megapack 3 are on schedule for volume production beginning in 2026. And preparations continue in North America for production ramps of Tesla Semi and Cybercab, both commencing in the first half of this year. After hours trade, Tesla are down by 0.5%.
Kind of mute right now in Tesla. Let's go back over to Meta. Microsoft's trading outside of its expected move for earnings, but not by much. Not yet. Can we go to standard deviations? A magnificent slaughter. Yeah, NQ kind of got waxed there. Hello. NQ down almost 180 points or so.
And now seeing numbers here for Lam Research, LRCX. They do report EPS of 126. That is above the expected 117, and revenue comes in at 5.24 billion. That is above the expected 5.23 billion. So top and bottom line beats there for Lam Research, LRCX. In after hours trade, they are currently up roughly 0.6.
Yeah, I think Meta is getting affected by the Microsoft press here, so we'll see. Yeah, if Meta comes out and the market likes what it sees, I mean, we could fly right back up. NQ will be healed, right? Now, if it doesn't like what it sees, that could be pretty bad. But Meta right now, it's back to being positive on the overnight, and we have earnings that should be dropping somewhat soon. Let's go take a look at Tesla. Tesla is popping off right here, slightly up.
And just seeing some further metrics here from Tesla. It does report free cash flow of 1.42 billion, shy of the expected 1.59 billion, and operating income 1.41 billion, above the expected 1.32 billion, and gross margin 20.1%, above the expected 17.1%.
Let go. Tesla. Gotta drive in my little car here. Here comes Tesla all the way to 450, 455. Ride or die, here we go, fly, fly. Here we go, come, come, come. Up another $17. Choo, 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 here we go. Fly, fly, fly. Drive, drive, drive. Do 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 do. Do 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 do. Maybe work on the lyrics, yeah. All right, let's go back to Meta. We'll come back to Tesla here. Waiting on that, I believe. No movement yet. Perhaps Microsoft might be bouncing back a little bit here too. Coming back to its 1 standard deviation move. Well,
I'm now seeing IBM numbers. IBM, they do report EPS of 586. That is somewhere above the expected 428. So we'll look out for an adjusted metric if there is one. Revenue comes at 19.7 billion. That is above the expected 19.2 billion. Gross margin comes in at 60.6%. So it's a strong report here for IBM, who beat on both top and bottom line.
IBM. Moving and grooving. Go back to Tessie. Still moving and grooving.
In terms of looking ahead for IBM, they do see full year outlook, constant currency revenue growth of over 5%, free cash flow to increase about 1%, 1 billion, my apologies, this year. And in terms of guidance, they do see full year 2026 revenue of 70.14 billion. That is against the expected 67.05 billion.
That dollar is just still coming off here. Nice little V recovery there in NQ. Can't say that I'm too shocked with that. Now we wait on Meta. Did Meta come?
And just regarding that adjusted figure for IBM, that was 452 adjusted EPS, still above the expected 433.
Somebody was asking about Now earlier, but that is reporting earnings. I wonder what that one did. And Now is going bumping up here. This one had an expected move of $11.58. Basically exactly right there. So that was the expected move there for Now. Tag the upper one. Oh, am I still on my Tesla? Oh yeah, I am. Meta did report. Why am I not seeing the numbers for Meta? Okay, yeah, that's definitely moving. Am I missing the numbers here? Ah, there it is. Yeah, Meta reported. Earnings per share, 8.88, expected 8.19. Revenue, 59.9, expected 58. Positive move to the upside. We have 715 to the upper daily implied move there for Meta. Oh, we're saved. Poor Microsoft. All right, Microsoft's trading back within its 1 standard deviation. So we came back to that level. So just doodling around, it's 1 standard deviation that the market priced in. Tesla, still wide open. Although Tesla's expected move, like most of these, they're 2 days. So I would be watching up here as a level, maybe even into tomorrow if we don't go and tag it overnight. Or, you know, on the call or whatever, but I would be watching this level. And then obviously the ones below, because, you know, we can still reverse. It's wide open to do whatever still. Las Vegas Sands did report too. Let's see them. They're kind of tied to China, I believe, if I remember correct. I might be getting confused with another one. That one's down a little bit here. IBM, let's take a look at IBM again. IBM's trading up significantly here. Big move on IBM. Killer move on IBM. This thing is up 6%, $19, just over $19. Expected move was $19, it was $20 was the expected move. So we're coming into the expected move for IBM right now. There's your expected move for IBM.
And now we are through with those main earnings for this evening. Just recapping some of the after-hours performance. Microsoft, they do appear to be the laggard in after-hours trade. They are down 5%. They have trimmed some of the losses at their worst, but of course still down 5%. Looking at Meta in after-hours trade, they are seeing strong gains now, and they are up 4%. Meanwhile, Tesla, TSLA, they're also seeing gains up 3%. So pretty mixed performance here with both Tesla and Meta seeing strength, while Microsoft are the laggards.
Talking about now, I brought up now earlier, but yeah, I didn't realize that there was earnings after the bell, which I wouldn't have traded it regardless. But I mean, it hit its expected move and now it's down. So I don't gamble expected. I don't gamble earnings, right? That's not what I do. But yeah, the chart's still bearish. But it came up here. That was nice. So maybe it'll come back up there. But right now it's unchanged, which is not bearish, right? It's not bearish. But the daily chart, just from a price action perspective, is. So just got to keep that in mind. Let's see what silver, if it's doing anything. Oh, man, I was thinking silver can get up there. And then I was thinking about re-entering into gold here. No, I think I'm just going to wait for 500. I feel like it's coming up here. So, and if it doesn't, it is what it is. That's fine. But I feel like it's going to get to 500. GLD. Live a little. I mean, if I do I would just look at the expected move and say, what am I willing to risk on losing $30 per share or whatever it might be, you know? Then I would trade it. I'd be like, oh, if I'm like I was bullish Tesla, right? But once again, you know, during that speak, I was like, I'm not going to trade it. And I also said I'm kind of bullish everything, but then again, I just can't trade it. Looking at Tesla right now, though, I mean, it's kind of flagging out here, and I know the expected move is still higher. So, I mean, I don't know. This doesn't look all too horrible. Still got an earnings call, I believe, though. Let's say if we pull back in, just from here to here, that's 3%. Pretty wild. But I have to be okay with coming all the way, you know, basically down here still, which is, you know, 8%. So I'd have to just structure the trade that way. But yeah, this doesn't look all too shabby. Dun, 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 dun. All right, I think I'm going to call it. Think it's time to call it. Thanks for tuning in, everybody. Yeah, IBM had a big move. Never listened to you. Thanks for tuning in. I'm going to be calling it right here as the stream winds down. Everyone have a good night. Thanks for tuning in. No market brief video tonight because I've been live all day. Toodaloo! Thanks, Palm Tree. Mahalo, Barkster. Cheers, Cameron. Hope today's stream helped out. You too. See you, Isaac. Nikolai. See ya. See you, Itchy. Cheers, cheers, cheers. See you, Jose. See you, Sack Man. Sack. Nice. See you, Deadlift.